Hello, everyone. My name is Joe Coughlin, and I am the founder and CEO of Corporate Risk Solutions. Just as a little disclaimer, Corporate Risk Solutions is an independent risk advisory firm that serves the alternative capital space. We further define that as private equity funds, hedge funds, distressed debt funds, venture capital firms, and certain types of restructuring activities that are out in the marketplace. These 100 or so funds that we work with also happen to own approximately several hundred portfolio companies, and we act as outsourced risk advisors there too. And our reach is global in nature, and we're in virtually every industry group around the world. So it's a pretty exciting place to be. And I'm particularly excited about this next edition of Conversations with Coughlin for the two people that I have here today with me. And I've got, in the way I'm seeing it here, I've got Stan and I've got Dan. So we've got Stan Miroshnik and we've got Dan Tapiero. They are the founders of a brand new firm, a brand new fund called 10T. And I wanted to just kind of dive in here, guys, because I don't want to gratuitously get too far ahead of myself, but when people say, I'm just so excited and so happy to have you guys here today, in this case, I really mean it, because I don't think that there's another subject that we could talk about that is as critical or as timely as what's going on today in cryptocurrencies, including Bitcoin and the like, the Ethereums, but more importantly, as a base, the blockchain that exists, that it all basically travels across. So with that, I just thought, as a brief, bio, Dan, you came out of college and you started working, I think, like almost right out of college with Julian Robertson. Along the way, you worked with Stan Druckenmiller. You worked with Steve Cohen, a macroeconomist. Stan, you're a past CEO of Argon and Element, which is, I guess, now Actual, and you were a managing director at Rosemont. And I actually also thought that possibly Mass Mutual's involvement in last fall in investing into Bitcoin, that somehow you had something to do with that along the way. But anyway, you guys are absolute, I think, mavens in this space. And today we all read about how the digital currencies, the DAE, as we say, are beginning to see some really widespread adoption. And if we look at, most recent comments from Powell the other day, and again with Janet Yellen, and this is me, I'm fairly opinionated, but the comments that come out of a Janet Yellen seem to be still harking back to Silk Road, that this Bitcoin and blockchain, it all travels on this, mysterious place, and people are using it to buy drugs and prostitution and what have you. And while Silk Road, was a unfortunate, moment in history, I think it's so much more. And so today you have Guggenheim, you've got Mellon Bank, MasterCard, BlackRock, Square, PayPal, even Tesla, as of last week, have made significant investments in Bitcoin. Coinbase, the largest crypto exchange, is preparing for an IPO in the near future. It's valued as of last week at like $77 billion at the time. And everywhere we seem to hear about how blockchain is going to revolutionize the way we do business in all walks of life. So I guess, let me start off here. What brings a molecular biologist or a molecular biology student from Cal Berkeley together with a history major from Brown? And maybe you could just tell us, what is 10T, why, and what, and who is it? Dan, maybe?
Sure. Yeah, sure. Haven't really quite thought about it like that, Joe, before. I think in all my conversations with Stan, I don't think I've ever even said the words molecular biology. So you really did some ferreting, some digging down there into the history. I know. I mean, that's a lot of work there. I thought Stan was a computer guy. So look, 10T is really simple and straightforward. 10T, we're building a portfolio of 10 to 15 private companies that are in the digital asset ecosystem, that are growing up with the adoption of Bitcoin, cryptocurrency, and blockchain technology. And we are the first fund that we're aware of that is focused explicitly on the mid to late stage part of the capital stack. All the funds in the space, many of whom you probably know, the Andreessens and Polychain and Paradigm and Parafy, all of those guys are focused on seed and early stage companies, but also protocols and tokens. They're involved in DeFi and stable coins. We are not. We have a very simple strategy and focus, and that is accumulating stakes in these 10 to 15 companies that we think are already successful. They've already figured out how to win. They have valuations of over $400 million. So these are not, companies. These are not companies with, two guys sitting in a garage and hope and a prayer. These are what we think are established businesses. And I think that's part of our edge to this, is that we really saw pretty early, even a year or 2 years ago, that there were more companies in the space that were established than people really understood. And so we think there are at least 40 companies that have a valuation of over 400 million. And again, the portfolio we're building is going to have 10 to 15 of them. And it is in a traditional sort of private equity structure. The fund will have, it's a 10-year life fund. The second fund, we closed the first fund a few weeks ago, as you know. We'd raised $124 million. We've also had a significant co-invest on top of that. And so the fund already owns 2 companies. We're launching Fund 2. That fund will be closed, Fund 2, with an end of April a launch date. And that fund will actually, we've decided to have a shorter life. It'll be probably 6-year life with 2-year extensions, just because the opportunity that we saw a year ago, we thought, would play out over a longer period of time. We still think it's a portfolio to hold for the next sort of 5 to 7 years. But given, as you mentioned, the Coinbase listing, and also the move in Bitcoin from 10,000 only a few months ago to now 50,000, that's really accelerated focus on the space. And I think right now we're really in a position where we're really trying to catch up and move very quickly. And so, I come at this from the global macro perspective. I've was in the hedge fund business for 25 years as a global macro portfolio manager. And as you mentioned, I worked for, Julian Robertson and Michael Steinhardt and Steve Cohen, Stan Druckenmiller, had my own entity called DTAP Capital that still exists that I launched in 2003. Also launched 2 businesses in this Gold Bullion International, GBI, which is a physical gold sales and storage business. I think you're a client as well, if I recall. And of course, Agcoa, which I launched with Druckenmiller, which became the largest private farmland REIT in the US, that we sold in 2013. And so my interest in Bitcoin sort of came out of my involvement with the gold company. And Stan has been in the space, as you mentioned. He had his own advisory firm called Element, has been in the space for 5 years and has a deep network. And we met actually through the junior partners in the fund, Clark Gillum and Dan Froyman, who introduced us, and they had been involved in the space. And we just sort of had a meeting of the minds and, came up with this idea for 10T. And so we met through, I would say, mutual contacts in the investment world. And we've been, fortunate that our timing has been good and that people have had, significant interest in investing. And we see it really picking up now. So we think the second launch is going to be potentially even larger than the first.
Fantastic. Stan?
Yeah, I mean, you're really bringing up some sore subjects. I mean, I'm a disappointing son to 2 immigrant parents who didn't become a doctor and went to Morgan Stanley instead.
But you'd be locked in your hotel room. I mean, your dorm room.
But I think as Dan shared the story, I spent the last 6 years in this space. I built 2 investment banks. I've done everything from mining and technology to capital markets to advisory to building a technology platform for tokenization of assets. And when we met through a couple of colleagues, it was really kind of a meeting of the minds and understanding how do people get exposure to this space? How do they do it in a kind of a grown-up way, like without the excessive volatility, without exposure to compliance risks? Where is the right kind of place to play? But also, what does the industry really need, right? And we saw a gap in the capital structure of this space. There were lots of people that are investing super early tokens and Series C, kind of bleeding edge stuff, but nobody was really helping companies scale, right? When they figured out what the business is, when they know that the flywheel is working, where is that next capital coming from? And all the larger firms that are able to write larger checks are just not in a position. They can't underwrite the space. They don't know the risks. And it's like, I often talk to people about this space like biotechnology. It's wide and it's deep, and you have to have an understanding of the basic science to be competent. So we set out on, to launch this fund, which has been incredibly successful the last couple of months. And we've got a couple of companies in the portfolio, a really excited base of investors that are ready to co-invest into really interesting, compelling deals. So I think we're in a good place.
I know people use the expression of going down the rabbit hole when you do start to really think about investing into the DAE, right? DAE stands for a digital assets ecosystem, right?
Right.
And it is an ecosystem. And we'll get into that in a moment. But I just remember talking to Dan months and months ago, and he had told me, and I thought he was a fairly smart guy, that he had spent, months and months and months, looking at blockchain and all of these different, currencies that were out there, and what made it so compelling. And, as he mentioned before, just on the gold bullion side, I started to see a correlation there. And then I did my research and I read the Bitcoin Standard, and now I'm reading the stories of blockchain and all the other types of things that are out there. But I've watched, like I said, hundreds of these interviews that are out there, and you see the smartest guys in the world that are investing into this thing. And it seems like it's a very binary, thing. It's either people go, oh, that's fraudulent. Like I say, that's Silk Road type of stuff, which I view as like saying that, carbon paper is coming back and whiteout, the ship sailed, we're not going back to horse and buggies. And I just think that, it's like everything else where there's a short that exists, people are looking to short the idea and if nothing else, just impinge on the trajectory of where this is all going. So when I look at the way you guys have come together and put some, and especially you even have a MIT background there, Stan, but I like the way you described on your website, which 10T, the number 10 and T, and hopefully we'll flash some things on the screen a little bit later. But I like the way you described the way the evolution took place. And the fact is that in the 1960 to 80, you had the pre-internet, period that took place. Then 80 to 2000, servers and local area networks existed. So you had centralized control pre-internet, you had centralized control with the servers. And then 2000 to 2020, it was iCloud and mobile and internet, also centralized. And now we've moved into this distributed computing, which is decentralized. And what really drove this paradigm shift now? Why do you think that this took place?
Stan, do you want to kick it off?
Yeah, absolutely. I'd say there are technical and social reasons for this. On the technical side, it's about reducing risk and dependencies, right? So all of our data basically lives inside Amazon now. Maybe some of it's in Google, maybe some of it is in Facebook, but AWS is now the infrastructure of the US internet, right? And it's all subject to kind of their corporate policies and so forth. And so the technical push is, well, how do we de-risk and decentralize so our information is secured through cryptography and lives in many places in the world? It lives on the network itself and not on, Amazon Inc.'s, Delaware company's computer, right? And so that's a technical push. And that on the social side, we're seeing it come up now more frequently, especially with this administration, where there's concern about where your information, your content as an individual lives, right? Or your content and your information as a U.S. person, right? Or a Chinese national or Russian national. And so you have all these dynamics pushing back against Facebook and Twitter, these large platforms. And so decentralizing that content, that information, having your identity, even healthcare records sort of decentralized and not in your own ownership and not owned by a single company has become important. And so these two trends, which are being enabled by the technology behind Bitcoin, the technological rails that were invented to make Bitcoin possible, that's extremely topical now.
Got it.
I think that's well said. I mean, you know, the as he just mentioned in the last point, I think that being key, that people don't understand that Bitcoin, what I call Bitcoin capital B, Bitcoin network, the machine of Bitcoin as explained and laid out in the Satoshi white paper of 2008-09, that the mechanism of Bitcoin as it's explained there is something that is a real invention. You know, when you talk about the blockchain or blockchain technology, that's the technology that underlines how the Bitcoin network operates. And Bitcoin little b, as I say, is the token or the cryptocurrency. That's the incentive mechanism for people to secure the transactions on the network. Again, this is not something that just some random person came up with. You know, it's often joked about Satoshi. Who is he? Is he dead? But the bottom line is that white paper solved a math problem that had been unsolved for hundreds of years called the Byzantine generals problem. So again, and that problem is the problem of distributed trust. And that's how do two counterparties trust each other without an intermediary? How do they send a large value to each other without an intermediary? And that's the genius of the white paper and also of the Bitcoin mechanism. And so just want to clarify that, you know, this is something that we think is an invention akin to the invention of the combustion engine or akin to the discovery of electricity. This is not some funny little, you know, idea that somebody came up with that is used for illicit, you know, activity. This is sort of a great invention for the world. So I think when people start to see it within that context, you know, I think maybe they start to see, okay, well, maybe there's something more here. And then you read the Bitcoin standard and you understand that there's applicability to financial world, et cetera, et cetera. So
all right, so that kind of touches on a number of different things. But for me, when I watched the other day, it was late last week or maybe late midweek, the Fed Reserve President Bullard was on CNBC. It was last Tuesday, and so it was talking about the continuation of the dollar as far as the eye could see. And I, to be you know, somewhat smug, I was like, well, how far can the eye actually see? Because to me, it seemed to be like the same thing where, like I mentioned, that Janet Yellen, for the second time, seems to have doubled down on the fact as to where this is all going and the speed at which it's going to be. On the other side, you do see surprise things, to me anyway, like Senator Cynthia Lummis in Wyoming, who is, I remember just seeing some of her ads that were being run during the campaign, and as to what she wants Wyoming to be and where it could be, and with crypto and Bitcoin, et cetera. So these are powerful forces that are really, you know, they've got a real governor that's holding the market, maybe in a way to keep it from going too frothy, but in a way that's also, you know, look away, just look away. Nothing to see here, folks. Any thoughts on?
Well, I mean, I'm not exactly sure what you're getting at. I mean, there are two opposing forces, and I did, you know, see the Yellen comments. Look, the people in power, they still don't really know what to make of it. You only have, for the crypto space makes a big deal of these 2 or 3, you know, legislators that are interested in Bitcoin, but it's still very small. Yes, it's $1 trillion asset class. Yes, the ecosystem, that whole world of Bitcoin and the companies involved is maybe worth $2 trillion. But, you know, we have hundreds of trillions in assets out there. You know, the Federal Reserve is dealing with money supply and liquidity. They're dealing with managing the economy. And yes, the Bitcoin and crypto people are very loud and they have strong conviction. And yes, the assets come from zero to $1 trillion, but it's still only $1 trillion. And no, it does not threaten the dollar. So I would agree with Bullard. It's a long way before the U.S. dollar has an issue, and that's largely because there's no other country really that has as large an economy, as creative a group of workforce, and certainly as large a military. Don't forget that we do navigate the seaways. We have whatever it is, 20 aircraft carriers, which is more than all the other countries of the world put together. There are a lot of things that back the dollar that are intangible. So I don't think the dollar is going away, but do we think that there's going to be a digital dollar? I think definitely we do. And I think the Fed started to roll that out last year. The ECB and the Bank of China as well have digital currencies. And again, there are going to be companies that are going to grow up in that digital asset ecosystem that will be, helping service those digital dollars, help servicing the rails, building the rails. So we don't exactly know where, what the endpoint is, but I don't think anyone thinks that we're going back, as you said, to the horse and buggy or the whiteout phase. Everything is going to be moving into the digital realm. And it just so happens that for things of value, that the internet actually does not have an existing secure method for the transaction and transmission of value. And so the system that we use today, the SWIFT system, as you know, is something that was developed pre-internet. So clearly, there's no one out there saying that's an old system, that doesn't work. We know it doesn't. We're putting up with it because we haven't had anything that's better to replace it. And I'm not saying the Bitcoin network or the other blockchains that are out there that have other functions are going to replace it. But I do think that they're going to come together over the next 5 to 10 years so that we have a more fully digitized network platform for the exchange of value. So
Dan, thank
that's
you.
what I would say. Yeah.
Yeah, I'd say if you go just one level deeper beyond the talking heads to the actual policy level, the Treasury had a tax view on Bitcoin since 2013. It has had a clear view of how digital assets work within the Bank Secrecy Act context for many, many years. The CFTC has a specific view. The SEC is on record around these assets. So there's at the implementation level of the government, it's sort of full speed ahead. And now with the new head of SEC who used to teach blockchain at MIT, I think there'll be even further clarity around tokens as securities, digitization of real assets, and a real kind of shift in policy. So I actually think the regulatory environment is very positive for digital assets broadly.
Yes, Stan, I thought you were going to mention there's Gensler, who you mentioned, but there are two other people who have just been appointed to key regulatory positions who are also advocates of Bitcoin. What were their names again? I mean, one is it Barr? It's at SEC. It's SEC, CFTC, and
the OCC, the new head.
And the OCC, the banking regulator, also I think may even come from one of the companies in the DAE. So. At least in the US, but look, Joe, don't forget that this is the most decentralized, most global, I even want to call it phenomenon that we've ever seen. I mean, as a global macro guy who's been involved in markets for 30 years all around the world, there's nothing that I've ever seen that is so global. Every country in the world, or not ever, but most of the countries, even the smaller ones, and especially the ones where monetary policy is not really, I would say, in good hands, or where the currency of the country is being debased artificially. These people know cryptocurrency, and the stigma that it has in the US doesn't exist. Stan mentioned before Venezuela. I think that's an extreme case, but countries like Brazil, that have had massive inflations in the past, Argentina for sure, are very comfortable because they understand currency in a different way than we do as Americans, right? We don't think about the dollar often. We're looking at NASDAQ all the time, which in a way is a dollar proxy, but we don't have to get into that. But around the world, would you rather have Bitcoin or like the Nigerian Naira, that devalued 50% last year, whatever the number is, I can't remember. So this is really a global phenomena, and that each of these different, jurisdictions, they have different rules. But even if there were problems in one jurisdiction, that might not have any impact on Bitcoin and cryptocurrency itself, right? And certainly not on the development of, and the use of blockchain technology in other matters. And maybe that's a segue for you to ask a question about your specific industry.
And it is, but just before I get
I'm setting this up for you, Joe. I just teed it up for you. You don't even have to ask the question.
You're good. But I was just going to add, at the risk of diluting the conversation, that if we say that we're a free market system and we have this, and you look at all this Keynesian stimulus spending that's going on and that which is still being proposed, I think we all agree that inflation wants to rise right now, and fiat currencies, we wouldn't be looking at the dollar in the same way, just as other countries have either massively devalued their currencies. But that, to me, is the biggest reason why Bitcoin is the gold standard and is the new gold standard.
Well, Joe, let me interrupt you there for a second, because look, there's a specific
an argument with the macro guy now, or
no, I mean, you might have diluted the conversation there a little bit. No, I mean, you should have said in the beginning of this interview that you and I have known each other, I don't know, 20 years. So,
well, I went to the University of Hartford. We say Harvard, the T is silent.
Yeah. So therefore, you're not diluting the conversation. You're bringing at least good humor. Look, I think that the recent explosion in the money supply and the extreme increase in liquidity brought on by post-COVID developments, yes, that's made very clear to people here that you have Bitcoin, which is in limited supply. Only 21 million will ever be mined, 18.5 million out there, versus the dollar, let's say, where money supply is increasing at 26% annualized rate. Yes, one thing is being increased in supply. The other thing, the supply is not increasing. So clearly you want to be long the thing that's not increasing. But I think that Bitcoin and the evolution and development of it is its own thing. And it would be happening whether we had COVID or not. You see what I'm saying? To accelerate this, accelerate this phase. So Bitcoin, has been around for over 10 years. It has been growing, and the network has been increasing, and its stability and its world has been growing, and it would continue to do so even if we didn't have that debasement of currency going on. That is something that just accelerated it. So I just want to be clear about it, that Bitcoin hasn't come to prominence as a result of central bank monetary policies. In some ways, they're working a little bit together, because yes, over time, especially with zero interest rates and negative real interest rates, that Bitcoin, again, is something that's not being debased, but that really isn't the true driver.
I get it. I stand it. It just, for me, I guess, as the novice amongst this group, as the newest entrant into this space, this seems to me, yes, certainly a catalyst, which a person that knows even the slightest bit of economic, about economics would say, like, geez, can this tenable in the long term? Stan, I didn't know if you're going to say something, because I was going to get to.
He was waiting for your question about the impact of the technology on the. Okay, there we go.
Dan and one of your associates, Paulina, I believe, put together, which I had happened to ask Dan, saying, hey, look, you guys are investing in blockchain companies. And I like, Stan, I'm going to steal your thunder, where you used in your cast with Raul, where you said, the VC guys, they got those at the tip of the spear are investing $1 and they're trying to sell it 100. And you guys might be coming in with companies that are real, that are producing, that are making revenue, whatever, and you're buying it 100 thinking it's going to 1,000. Now the VC guys can go from, 1 to 100, but they can also go to 0. Whereas the chances of going to 0, I think are slim and none. But
Right.
when I look at the blockchain companies that I had asked, Dan through Stan to say, we all know what the blockchain is going to influence businesses into the future. I think what we haven't seen truly on the insurance side, on the risk side, is where blockchain is working on a day-to-day or in a day-to-day environment in there. But the missive that you put together of the number of companies that are out there with various applications that are blockchain related and the adoption factor, I guess, Stan, the question is, what do you think is, why does this disconnect still exist? And are we getting close to, breaking through of businesses in general, not just insurance, but of really adopting blockchain technology in their day-to-day, servicing of their customers?
Yeah, it's just early in the space. What blockchain is at the core is a database, right? It's a public, transparent, convenient, super secure database that companies can use to store and share information. So if you think about a traditional large company, the way it silos databases, informations, multiple vendors that are using their own systems, it costs a lot of money to reconcile all of that. There settlement lags, there's capital tied up selling between different accounts, different currencies. And it's going to take some time to transition to this technology, which is in many ways middleware. It's a better tool for doing what the companies already are doing, but it requires an overhaul of their entire IT infrastructure. And so when we think about applicability, for instance, to insurance, it means that the insured themselves need to be operating at a better level, right? So if we talk about trade finance, for instance, having systems that monitor how cargoes move, how they transition through various points, and then recording that in the blockchain gives you an ability to underwrite something instantly or settle something instantly or pay a claim instantly in multiple currencies across the world without having to get a paper receipt or having all these kind of intermediate systems. And so it just increases the velocity of business money transactions. But it's going to take some time to integrate these systems into what is often legacy technology. Most banks are still operating on the COBOL systems that were built in the 70s because it's too hard to swap out mainframes. And so we're going to see the shift is coming. It's just going to be more gradual as the new generation of technology gets integrated into large businesses.
Well, that's a good point. I mean, a very good point, because I remember, there was a stat a couple of years ago that I read that State Farm alone had in its databases, its IT, 10 times the amount of information that the Library of Congress has and stored. So when you mention about, just converting over and moving over, but I think about the way that blockchain will help in the prevention of massive fraud that takes place every year in all lines of insurance. I think even though we're not, focused on the medical side, the health and welfare side, as much as we are on the property and casualty side, you could really see that on the health and welfare side, that just having that track and that ability to make sure that this is the person, this is the claim, this is what's going on. But when you get into the more complex issues, or not even complex, just the issues where people have, you're an insurance company, you sell the personal lines, the homeowners, the auto insurance and the life insurance, that there's this continuity, and just knowing that you wouldn't have another person coming in and pretending to be you or filing a claim or whatever it might be. The applicability amongst all the other industries that you guys are looking at that are adopting blockchain it's just got to be massive.
Yeah, I would say one thing, I think Stan said it very well, but I think also think about I don't want to say having everything in one place, but I think about everything. Imagine having everything, all the paperwork that you've ever done, all the risk assessments that you've ever done on one specific, public blockchain. And again, they're going to be private blockchains that are going to be interacting with public blockchains. So, to have everything under one uniform technology, whether there are immediate efficiencies, some people say, look, it's just a ledger. It's not really adding, that much value. You don't really need a blockchain to perform this function. The bottom line is that everything is so disparate and broken apart and in different places that there are huge inefficiencies from everything being in its own world. And as Stan mentioned, a lot of the technology dates back decades and decades ago. So this is, to me, a full upgrade of the entire world's sort of management of not just information, of course, but value would be, because it's the security of that original Bitcoin network that is so valuable. Again, there'll be other blockchains that have other applicabilities, but it's the connection of all of them in this new digital asset ecosystem that I think is sort of the exciting thing from our perspective, and I think is coming. I think it's unavoidable, really.
Right. Stan, anything else on that?
I'd mention just one really cutting edge part of this sector, which is smart contracts. And we can call it, you can think of it as a smart insurance policy. Smart policy, insurance policies are just sets of rules of when things get paid or not, right? Right. And so we now have companies like Nexus Mutual or Cover that are able to, instantly write policies that are aware of other financial contracts in the market, and they settle themselves, they pay themselves, they don't need human appraisers. They can even generate new policies when there's an extension in time. And so this kind of new wave of financial products that are being built around blockchain are driving a new generation of insurance products that are sort of self-aware to some extent, right? And they're using the old mutual models, and they're going back and doing it in a very regulated, transparent way, but it's all like living within this new network.
Yeah, I think you're right. And the parametric policies that are still to come, I think are going to be fascinating. Well, listen, I know we could talk for hours on this subject, but let me conclude with this real stumper of a question. I'll start with Stan first because Dan will probably steal it, but I actually got the idea from a personal hero of Dan's, Barbara Walters. And that is,
oh boy.
hang on, come on, Dan. Stan, if you were a tree, what kind of tree would you be?
What is that, Joe? Come on, buddy.
Give him some time, would you?
Probably a pine. Yeah, I like the outdoors. I like skiing. I like nature. I like the stability it represents. That these are multi-generational trees. So something like that.
All right, and Dan,
outside of my house, right in front, we have a beech nut tree that's probably 80 years old. It's easily 100 feet. It's a massive, beautiful tree. I think that would be. I've got many pictures of it. I can send it to you. I think it's a unique tree. I've been told that it's and of course an extremely valuable tree.
There you go. Well, let's just hope that root system, and let's see what other analogies we could build here. But listen, I really want to thank you guys a lot. You're good friends, and I'm really excited for the prospects of 10T and blockchain and all the things you've done. I would encourage anybody who is either follows Real Vision. And by the way, I really love the fact that Fidelity looks like it's going to really start to dive in more into this DAE and digital asset ecosystem that much more. So I think that they're really got a very good runway going. And thank you guys for being so much on the cutting edge. And we look forward to checking in with you again soon.
Good. Thanks, Joe.
Thank
Thanks,
you.
Joe.